I love it. The last halving, we're 4 years later. It was $8,000. Today it's $64,000. Name another asset that's performed that well over a 4-year cycle. You can't.
Now, what exactly is the Bitcoin halving? Every 4 years, or after approximately 210,000 blocks are mined, the reward that Bitcoin miners receive is cut in half. This reduces the number of new Bitcoin entering circulation, and historically, after each halving, Bitcoin's price has skyrocketed. In 2016, it jumped from $650 to nearly $20,000, and in 2020 from $9,700 to over $60,000. Will this trajectory continue?
You do have a market that's out of balance, that there's too much demand for Bitcoin, not enough supply created through the block reward.
Tom Lee, co-founder of Fundstrat and a seasoned equity research analyst, mentioned that the halving reduces supply, and when demand remains steady, this drives prices higher. But it's not just about supply and demand anymore. Over the years, the idea that Bitcoin's price will rise after each halving has gained so much attention in the media that it has almost become a self-fulfilling prophecy. Each halving cycle is now anticipated with headlines pushing the narrative of a price surge, and this builds further momentum as more investors jump in expecting history to repeat itself. So why could this cycle be different? The efficient market hypothesis suggests that all known information, like Bitcoin's halving, is already reflected in the current price. This means any post-halving surge could be muted, as investors may have already priced in the event. But here's where things get interesting. We're already seeing historic patterns break down, even before the halving.
And we've even violated some of those historical rules that people held kind of as these like holy rules, right? We had never seen Bitcoin go below a previous all-time high. We had never seen Bitcoin hit an all-time high before the halving. Both of those rules got broken. And so I think we're in uncharted territory here. And people have to understand this is like an 80 vol asset that, yes, it's been the best performing asset, but it is very, very volatile all the way up.
Another key difference in this cycle is that we're starting to see more price stability. Previous Bitcoin bull markets have been marked by extreme volatility and multiple significant drawdowns, but this time around, things seem different.
Yeah, for context, this is a pullback for ants compared to what Bitcoin historically has been through, right? In previous bull markets, Bitcoin has experienced 30% drawdowns 5 or more times. So on the way up, in 2017, we went from $1,000 to $20,000. There was multiple 30% drawdowns. Right now, we're about 13 to 15% drawdown. So in historical context, this is actually a very small drawdown in a bull market. Now, the other thing that's happening, I think, is if you extend out and you look over the last 10 years, in the last 5 years, Bitcoin's up 1,500%. The S&P is up not even double. If you go back 10 years, Bitcoin is compounded. The compound annual growth rate of Bitcoin is 60%. The S&P is 11%. And so if you compare those things, if you want volatility on the upside, you're going to need some volatility on the downside to get there.
While we've seen various historical rules break in this cycle, one rule has always held true and remains unproven otherwise. Bitcoin makes all of its gains in a very short amount of time.
And one thing to keep in mind, Bitcoin makes most of its gains with 10 days every year. If you take out the 10 best days in a single year, Bitcoin actually has negative return.
This underscores the reality that Bitcoin's market is highly concentrated. Most of its gains occur in a few explosive periods. Missing out on these short windows can mean missing out on the majority of potential profits, but holding through the volatility has historically rewarded patient investors.
In 3 of the last 4 times that we had broken all-time highs, Bitcoin's price had doubled in 18 days or less.
These rapid price surges also show how Bitcoin's market defies conventional trends. While traditional assets might climb gradually, Bitcoin tends to explode upward in very brief, intense periods of momentum, further evidence that its cycles follow a unique rhythm, driven by both scarcity and speculative interest. It's important to remember that human psychology is still very much at play in Bitcoin's price movements. The efficient market hypothesis may suggest that all known information is priced in, but it doesn't fully account for the power of human greed and speculative behavior. Time and time again, we've seen how fear of missing out can drive Bitcoin to unexpected highs. On top of that, global factors like monetary supply have had a significant impact on Bitcoin's price. We've seen how liquidity in the system, particularly when there's cheap money flowing, has influenced Bitcoin's performance.
If we look at that Fed interest rate cut, Bitcoin is the best performing asset so far. Gold and oil futures are kind of second. There's a new study that just came out from Lynn Alden and Sam Galligan that said Bitcoin is the most sensitive asset when it comes to global liquidity. And so 83% of the time, Bitcoin moves with global liquidity. It's more than S&P or any other asset. And so if you look at not just the interest rate cuts, now M2 money supply is expanding, and also we have cuts going on in China and elsewhere. And so I think that Bitcoin ends up being a big winner whenever we get kind of cheap money flooding into the system.
Pompliano is right. Bitcoin thrives in periods of high liquidity. When central banks pump money into the economy, Bitcoin often sees huge benefits, reflecting its sensitivity to global financial conditions. But it's not just about liquidity or the halving. As Tom Lee points out, there are multiple factors at play, from the demand-driven bot ETF to more favorable regulatory environments and even the impact of upcoming Fed rate cuts.
Well, I think that sometime in the next 12, 18 months, Bitcoin can be over 150,000. But that's because, the backdrop for Bitcoin is so much more favorable today. We've got more visible demand from the spot ETF, and we know the supply dynamic is improving with the halving coming up, which is less than a month away. It does help that the Fed is becoming dovish. I mean, that's easier monetary policy. And I think from a regulatory perspective, we had so many hammers dropped in the last 12 months, really 18 months, that unless it's going to be worse over the next 2 years, Bitcoin's already faced sort of the peak of regulatory backlash.
In the end, Bitcoin's price is shaped by a mix of psychological, global, and economic factors. While history offers some patterns, this cycle could bring new surprises. If you enjoyed this breakdown, make sure to subscribe for more insights on crypto and market trends.